And good morning, and welcome to VSA Capital 5-Minute Morning Miner on Monday, the 15th of September. And yes, I'm back in London after a week down in Cornwall and missed the tube strike. Did lots of really good business, seeing mines, battery recycling companies, earth recycling, you name it. I was a busy boy down there, and I did play a bit of golf and paddle. So it was a pretty damn good weekend. Ollie, how are you?
I'm very well, thanks. Yep. Glad to hear you've been busy.
Yeah, always busy. Now, we've got all week, you and me, Ollie, because Paul's over in America. Sadly, his brother died the other day, so he's over there. So let's kick off. There's one or two things actually out this morning. Let's kick off. What do you want to kick off with? Andrada?
Yep. They've got Q2. Well, it's an operational update rather than they had their full year results, which weirdly I think are to the end of February. So this second quarter production figures end 31st of August 2025. But the production numbers look pretty good. They've had a record quarter of 453 tonnes of tin production. That's up 17% year on year. So that's come with higher recoveries, benefiting the production, and they're also benefiting from higher tin prices. So operationally, it looks pretty good. If you go back though to the full year earnings, which were released about a month ago, they're still losing quite a lot of money. A lot of that comes from financing costs. So the net loss was about £10 million, of which just over 6 relates to financing costs. And you can see part of that in the figures that they've put out this morning. A chunk of that is the Orion royalty. A couple of years ago, Orion did a royalty, debt and equity deal to get the tin production up and running. They're still at the top end of the royalty range, which is about 5.13%. But with production gains, they can actually get that royalty right down to 0.86%. So I think at this production rate, annualized 1,600 to 2,000 tonnes a year, that would drop it down to the first notch of 4.5%. But as they keep making progress, they can get it right down. So that will help that bottom line. So some interesting progress.
Yeah, look, the market's marked them up a teeny bit today, trading at 3.6p. They're actually up about 65% for the year, but still a long, long way off their highs of sort of 2022 and 2024, when obviously in 2022 was the lithium bubble. 2024 was probably some other sort of bubble. So, I think it's a very interesting company. They've got a lot of different ores down there. But yeah, it's... they seem to be all right. Let's move on then. Now, Mkango and Hypermag, they've got an update on their US partner, haven't they, Ollie?
They're trying to do the same thing as they've done in the UK and replicate a Hypermag plant in the US. So I think their design is about 25% complete, and they've got to find a specific site at Dallas-Fort Worth, and then begin the permitting process, which should start this quarter. I think the other thing to note is they've increased the capacity of the UK pilot plant by 3 times. But I think the most notable thing is that they've managed to get this SPAC deal progressed just in time for everything going on in the rare earth space. Obviously, you had MP Materials and Apple over the summer, and you're getting a whole load of investors and companies, strategics, all re-looking at this recycling space. It obviously got a lot of attention during COVID, and as with lots of good ideas, it became quite overhyped. And I think having sort of settled down, the better ideas are now coming back to the fore and being considered more seriously again.
Yeah, I mean, it's had a phenomenal run, Mkango. It's up 325% year to date, trading at 33p. And it's got quite a hefty market cap now as well. I mean, well done to the guys. They've been so patient and persistent to take it this far. They do mention in the RNS a little bit about needing funding, etc., in the US and talking to lots of counterparties. When I read that, I do get a little bit nervous. So probably at the moment, it's probably run far enough. I think there could be a bit of a pause there. It would be good to catch up with the guys actually and hear from the horse's mouth. We used to see a lot of them actually about sort of 15 years ago, probably before you even joined us, Ollie. Less so now. They're obviously, become a big, important company. But keep talking to us at VSA Capital, guys, because we're pretty active. Have you got any else you want to talk about, Ollie? I've got a couple of little things to mention.
Well, there's just a sort of macro thing in lithium. Lithium's had quite an interesting summer. And I think it's now past the point where you don't need over the last 18 months, you haven't needed to look at lithium at all because it was so smashed with the price coming down. But cattle taking their mine offline in China sent the price rocketing 40%. It's now dropped back 15% now that they've put that back online. But Brazil, at the end of last week, announced that they were reviewing mining licenses for lithium in Minas Gerais. And so that will affect Atlas and Sigma Lithium. But the price impact that the first issue had with cattle shows you that the market is a bit tighter than what people thought. And with a couple more supply side issues, the lithium market could tighten up and start to look interesting again. So I think it's time to start keeping an eye on what's happening in the lithium space.
Yeah, I mean, on a commodity like that as well, it's interesting this morning that Centrica have announced they want to put 10 billion into 12 small modular nuclear facilities. And there's obviously a lot of buzz going around at the moment that nuclear is about to have a bit of a fillip up and that the uranium price could go forward as well, Ollie, as a sort of macro point of view. I've always been a little bit cautious on the uranium price. It's quite a weird market. It's somewhat distorted, obviously, by the Sprott ETF and Yellow Cake holding so much of it in warehouses. But I think the uranium price could go up. But obviously, as people know, we think we are at the start, or we are in a commodities bull market. When you're in a commodities bull market, frankly, they all go shooting up. I think you want to be on the positive side of all commodities. So a lot of buzz at the moment about uranium as well. Finally, just a very small one that probably maybe many in the mining world haven't seen, but Litigation Capital Management have just lost another case, actually, which is somewhat disappointing for them. They've also done a bit of a strategic review into who they're supporting. They do support a lot of these mining litigation cases. The client that we obviously act for, which uses them, is Panthera Resources. I've spoken to Mark Bolton this morning already. He sees nothing to change for his situation. He's absolutely right, I think. I mean, the money's being deployed, so there's absolutely no need to worry whatsoever. He is in town at the beginning of October. If anybody listening to this needs a meeting with him, do let us know. And I think that's about it, isn't it, Ollie?
Yeah, I think so, yep.
Very good. We'll speak again tomorrow.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.